Thursday, December 4th, market analysis, Stan Ehrlich. Got a little cold here. I start out with stock market indexes, go to futures and some stocks. And of course, a little bit of teaching and opinion, etc. After 53 years, uh, commentary. I still think we're building head and shoulder tops in the stock market indexes, but it's now getting a little stale timing wise because normally the distance from the first shoulder high, in this case, a bearish engulfing ER sell signal, or maybe a day or two early, was early October, the top of the market with the major sell signals. So far, the top of the market also was on October 29th and 30th. That distance, time-wise, should be approximately equal to the distance amount of time from the top, the head of the formation, to the last shoulder high. Now that time is past, and we are about a week, maybe even a little more past that. It's not terribly unusual that sometimes the last shoulder is a little early or a little late from what the normal expectation is. Also, the price level at which the rally high for the shoulder, last shoulder, could be, often is very close to the same price levels that the first shoulder came up to. So that's not good either. We have a new high close, not by much. Pretty much going up just a little in the last week and extending the time frame. Only if I get some sort of significant reversal here super quick, like tomorrow, Monday, will I be able to maintain my head and shoulder top concept, especially if it has a sharp rally. That's the end of that. No head and shoulder top. Maybe a double top, possible, but the trend is still up. The turn hasn't really happened yet. I predict them. Next. Not doing a good job on this one so far. 15-minute chart gives you a picture or an image, a consciousness of how high up we have come over a certain number of days. We still have the top of the market back on October 29, 30. And we have a ways to go to break that, which would definitely create long-term bullish expectations. But I am expecting a reversal down, head and shoulder top to work, maybe only in the next few weeks into the Santa Claus rally buying opportunity, which is the first few days, 1, 2, 3 days in front of Christmas, and typically a offset the first business, second business, third business day of January. Although you might put a protective sell stop into the market and see if it'll go up some more if it works in the first place. Next, Spider, SPY, basically getting a little old by a day or two and a little tiny bit too high. Next, Spider 15-minute. And we've got the Qs. It is the same story. The patterns are there. They're just getting a little old, a little stale, and a little bit messed up, but not that badly yet. YM is the worst. It's moved up the most yesterday, and frankly, didn't do anything today at all. So I'm waiting for a big reversal all of a sudden. I need to close below the lows of the last approximate, 5 or 6 days. Next, 15-minute YM. And the Russell, very close to the major resistance level that has stopped rallying at many times in the last few years, and lately twice just in October. So maybe it'll top out again. Plus, we're getting extremely close to overbought. And there's the 15-minute chart. So bonds tested the neckline a second time on Tuesday and today. It is a new low close, but we need to close below today's low and probably therefore below Monday's or Tuesday's low, which would be a bearish breakout of a head and shoulder top, producing a minimum downside objective of 112.09. There or thereabouts. Still looking forward to that. So far, this pattern is working idealistically. Notes, trailing behind a little bit, still challenging a support line, then coming down to the neckline, then going to its objective, which would be in the ballpark of 110.16, 110 and a half. Gold, sorry, crude oil, up against resistance. That's about the best I can say. Sideways to lower slowly. But natural gas has been working its way above resistance quite a bit last 4 days. New high closes, looking awful good. Wouldn't now be surprised to see it go up to 5.530. And I don't know, that may not be that high, but oh, watch out. We're almost overbought. Another pop up. No, somewhere in the ballpark of 1.523, 4, 5.4 would get it overbought and maybe top it out. I would think you're too late to be buying. Heating oil, still looking at lower levels, slowly. Next, gold, silver, platinum. Platinum's got a reversal today. Gold stalling out after being overbought and a little bit of resistance, starting to slip off. Silver has done so. I warned you about this on the day that it got up to the high 80s in the RSI, and now we've closed at the lowest closing for the last previous 3 days and the lowest low for the last 2 to 3 days. Bearish engulfing ER official sell signal in platinum. This implies that that's it. The overbought condition a couple of days ago was the highest high. Too bad our bearish signal wasn't on the high day, which it is sometimes. And I'm looking for a move down to more than likely 1490-ish. Next, copper has gotten a little stronger than I expected. I'm not sure about this. We might work our way sideways to a little higher. I don't have a strong feeling one way or the other. Soybeans are trying to break out and did so yesterday of a head and shoulder top with a rally today, only getting back up to the neckline. Stopped right at the neckline on the close, even though during the day went up above it a little bit. So from here, it should be down. We shouldn't close any higher. We shouldn't make any higher highs. And it should make new lows like tomorrow. Next, soybean oil. Starting to drift off. Little double top. Possible breakout around 49.75. Then there would be a downside objective of 46.90. A little toppy. Let's see what happens. Almost overbought twice in a row here. Meal already broke out of a head and shoulder top on the day I talked to you about that, Monday. More lower, and basically unchanged today. Not oversold yet, but I wouldn't be surprised to see a bit of a bounce. We're already approximately a half, almost a half, maybe not quite a half, all the way down to its minimum objective of 300. Next, corn. There's still a head and shoulder top possibility with a downward slanted neckline with a downside objective, therefore, of 413. We did make a lower low for the previous 4 days, but it didn't stay there. It closed higher. But not anything particularly interesting. I still think we're topping out in corn unless we start to make it above this week's high, well, especially in a close. Next, wheat. Sideways, lower. And we go to Apple Computer. Overbought conditions are always a warning for me that the market is very soon, could be days, could be a week or two or more, going to top out. And most of the time, you're too late to be buying and should be looking for reasons to take profits or go short or go short. So looking for a move down to a minimum of 277, 276, which we came close to already today, but more likely than not, 264, and I'm not ruling out a gap closure in the ballpark of 252. There's chances of it getting even more bearish if the stock indexes start to act a lot more bearish. Next, Tesla. Overbought today, first time around where it topped out before. It's about to top out again, I think. Nvidia, a little bit of resistance at today's high, stopped it. Nothing new. Looking for some lower lows. There are some support areas, probably getting down to 164.40, and maybe even lower. Next, AMD closed part of its gap a couple of weeks ago, but the gap still remains to be closed at 171 and a few ticks. Sideways, looking for lower levels. The bullish engulfing we had on Monday has failed because we went lower than that low yesterday. So that's not in force anymore, so to speak. It just goofed. It did work for a fraction of a day, gave you a small opportunity to make some money, but that really wasn't the purpose of it. Next, MES. We're back to home. You guys have a great day and profitable trading to you.